Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. I'd like to offer you some foreign exchange charts today. The first chart I'd like to look at is the euro against the dollar. Now, looking at this chart, we can see a bullish white soldier yesterday, but a tepid one. It was a counter to the previous session's bearish harami, but did not go as far as setting up to the overhead short stroke medium moving average, currently 117.97. Indeed, it failed to close over the broken but still influential 2011 to date downtrend, currently 117.64, though it did move back up and close over the neckline, currently 117.47, to the recent mini head and shoulders top. Nevertheless, the mini head and shoulders top is now seriously under threat as a pattern. Meanwhile, don't forget we still have a monthly key reversal down here. No expectation of immediate action, just remember it going forward. So far today, a move back up over the broken downtrend. Interestingly, we've not tested down to the neckline today. If that continues, then it could be a significant bullish point to watch. Next chart to look at is cable, aka sterling against the US dollar. An immediate countering bullish harami yesterday to the previous session's key reversal down. The seemingly discredited second larger bearish bump and run reversal trend line is acting as an attractor to this market, currently at 129.01. However, overall, the market is still bracketed by the rising medium moving average below, currently 127.98, and the rising short stroke medium moving average above, currently 130.24, though the highs at 130 even from 3 weeks ago also seem to be playing their bit in dampening bullish enthusiasm. The bigger picture, please remember that we also had a monthly key reversal down here last month. Nothing major to expect, just to consider it going forward. So far today, a follow-on higher from yesterday. The market is utilizing the bearish bump and run reversal trend line as a base of action for the move higher. The next chart to look at is euro against sterling. A possible bear spike yesterday, as the bullish forces from Monday's wannabe bullish harami, may have seemingly petered out. One could argue that it was the influence of the dipping short moving average above, currently 91.24. However, I'm more inclined to look at last week's highs at 91.57 as being a more likely reason. It was nevertheless the second consecutive close over the interesting 50% Fibonacci line, the March to April move at 90.85. Below that, we have the twin cause of recent support, the short stroke medium moving average, currently 90.57, and the medium moving average, currently 90.32, both flatlining. Overall, here like elsewhere, we've had a monthly key reversal, up in this case. Just bear that in mind. So far today, a nothing. We're hanging around yesterday's close, just over the 50% Fibonacci line. The next chart to look at is the US dollar against the Indian rupee. A counter to the counter yesterday. A possible, I stress possible, as it does not completely fill the criteria for one, but a possible bearish dark cloud cover pattern. This nevertheless counters the previous session's immediate countering bullish engulfing pattern and bullish opening white Marubozu. That's all quite a mouthful, isn't it? It just shows the overall tension that's building up as the market narrows between the rising 2020 uptrend, currently 73.08, and the flat 50% Fibonacci line for 2020 at 73.84. So far today, a small follow-on lower, but hesitation as we approach the uptrend. The final chart to look at is the US dollar against the Brazilian real. An interesting bullish engulfing pattern yesterday. The market moved up higher after what was ostensibly a seeming follow-on up to the previous session's indecisive spinning top. But it was a top which had a base and a strong rejection from the short moving average below, currently at 551.75. We seem to be finding some surprising support at this short moving average below. Meanwhile, resistance is being provided overhead by the middle time, currently 574 even, of the freshly drawn late July to mid-September bullish Andrews pitch rule. One other quick note, like many others, we've had a monthly key reversal up here, seemingly already working on the market. Please keep that in mind going forward. Well, that about wraps it up. So in the meantime, good trading and stay safe in the markets and in real life.